This is Matthew Cratter from Trader University, and today I want to talk about the Bitcoin bloodbath that's currently going on. I probably should have called this crypto bloodbath, but it just didn't have that same alliteration. Now, we've been talking about the possibility of a flash crash for a couple weeks, and it looks like something like this is unfolding. I wouldn't say it's quite a flash crash. It is for certain altcoins. For Bitcoin, it's been more of a slow bleed down with some drops. All the other cryptos getting hit very badly. The entire space is down about 10% over the past 24 hours. And as we have said, when Bitcoin is trading below its 200-day moving average, this is when it's open to these air pockets happening. And it looks like we may even go down and test the low 30,000s. It's really hard to say, and I don't have a strong opinion about that sort of thing. What I'm watching more closely is really the Fed. And as we've been noting for the past few months, Bitcoin's correlation with risk assets like stocks, corporate bonds, junk bonds, etc., continues to be strong, which means that as the Fed continues to tighten, in other words, become more hawkish in their policy, project further raises in interest rates and shrinking their balance sheet, this has the effect of hurting risk assets like stocks and also hurting cryptocurrencies like Bitcoin in the short term. So Bitcoin is affected by Fed policy over the short term. So is gold. It doesn't make either one a bad store of value. You have to measure store value over many years or many decades, and Bitcoin has a very good track record as a store of value. But no one disputes that it is quite volatile, and especially really since March of 2020, it's been highly correlated with risk assets like stocks. But the thing about Bitcoin, you do have these crashes, but then it always goes on to hit new all-time highs afterwards. So we're still monitoring the Fed here. We're watching the Fed slowly break the markets. And once they're done breaking it, once things get really bad, I don't think we're quite there yet, especially looking at the stock market. We haven't had a really deep pullback, though we have been seeing bond yields spiking, which has been putting some pressure on risk assets. But once the Fed really breaks something, and I think we'll know it when we see it, it's going to have to reverse course fairly quickly and rev up the money printers again, which will indeed drive Bitcoin back to new all-time highs again. I have zero doubt of that. It's important to remember that we're at this very special period, and it's a very volatile period where the wheels are coming off of the current system. We're at the end of the long-term debt cycle. We're in the fourth turning. We're at the end of the empire cycle. There are all these cycles converging in the 2020s, and this is one reason why the past few years have been quite weird in the markets and in real life. The wheels are coming off the current global financial system. The system is so levered that it can barely withstand even a small move by the central banks. And so that's why we get this kind of volatility in a tightening cycle. I've been talking a lot about that over the past week if you check out my videos from the past few days. But throughout all of this, it's really important to recognize that Bitcoin remains the best life raft available. It will recover nicely from whatever crash it endures. And the same, unfortunately, cannot be said for many altcoins. It's very important if you own dog coins or cat purse boy coins or special JPEGs, also known as NFTs, or if you own venture capitalist coins like Solana, there's certainly no guarantee that these will ever come back, and you may end up being the bag holder, especially something like NFTs. These are the kind of things where there could be literally no bids because they are non-fungible. They're these very unique things, and it's hard to know what the true value of some Bored Ape NFT is. And so that's why it's very important to understand what you own. A lot of people have been attributing the most recent move down in Bitcoin and other cryptocurrencies to the Fed releasing a paper and saying they're really going to start to talk and have a public debate about central bank digital currencies, Fed coin, CBDC, whatever you want to call it. I don't think this is really what's driving it. I think the Fed, with its other hat on of tightening, is what's driving this pullback in stocks and this pullback in Bitcoin. But central bank digital currencies is something that we're keeping a close eye on. A lot of people think that this is something that can hurt Bitcoin. Rather, it makes the case for Bitcoin much more clear. It will increase adoption when everyone has a wallet. And when people realize what sort of spy coins these are, and that the only exit out of the system is something like Bitcoin, I think it's ultimately quite a good thing for Bitcoin. SPY coins, CBDCs, are not a way to stop Bitcoin either. So I don't think this move down is being driven by that, but this is an area that we need to talk more about: the surveillance state, SPY coins, and the latest incarnation of central bank thievery. Meanwhile, though, as I said, we're at the end of the long-term debt cycle. This is a really interesting chart that I've shown a few times. This is gold priced in Weimar marks. So this was the Weimar Republic after World War I, and they went down the money printing route and ended up blowing up everything, destroying their currency. The blue line here is monthly changes in gold prices. So we can see that even during this period from the end of World War I through the mid-1920s, the price of gold, which is, at least back then, functioned as a true store of value, it had many months where it was sharply negative and then sharply positive. And throughout all of this, it's very easy to think that you could have just held gold and done really well. You could have held gold. It would have been a nice life raft in the Weimar Republic. But if you had used any leverage, you would have gotten yourself blown up. So I think it's important to remember that it's not just Bitcoin that is volatile when priced in dying fiat currencies. The US dollar is a dying fiat currency, and this is one reason that the Fed needs to move on to a CBDC. But this is what always happens. This is what happened at the end of the Weimar Republic, where the currency depreciated very sharply, and it was a very good trade. But if you used any leverage, or if you got scared by the volatility, if you were able to get millisecond prices in gold, which you obviously weren't back then. This is one problem with Bitcoin. There's so much transparency there. It's not really a problem, but it can be unnerving. This is why it's important to, if you're holding Bitcoin as a store of value, treat it more like a chunk of gold, where you're not checking the price on your phone every 5 minutes. It's important to remember that Bitcoin is volatile because it's still a fairly small market compared to the other larger financial markets, and so inflows and outflows have a huge effect. It's also important to remember Bitcoin is a free market because it's completely decentralized. It trades all around the world against all the world's currencies. It doesn't have circuit breakers, no lock limit down, no Fed emergency meeting, no shutting down the market at any point, and it trades extremely liquid, in an extremely liquid manner, 24/7. Now, most people say that they're waiting for a pullback in Bitcoin, and then they don't buy when that pullback actually happens. So if a couple months back you were one of those commenters saying, "Oh, I missed the boat with Bitcoin, why didn't I buy it?" Hopefully you've done your research and you still like Bitcoin and you're buying today, and you're not loving Bitcoin when it's in the 60,000s, then hating it now when it's a much better deal. It's important to think about Bitcoin. It's almost like value investing. You buy it for its value and you ignore the short-term price fluctuations. As we talked about in that Bitcoin flash crash video from a couple weeks ago, I set up a Bitcoin buy ladder. These are limit orders that I put in with various exchanges, and they're basically buy limit orders to buy a fixed US dollar amount at 40,000, which got filled overnight, 35,000, 30,000, 25,000, 20,000. And again, this isn't investment advice, this is just what I've done, but it makes the most sense, at least to me, to buy a fixed dollar amount at each of these levels. In that way, when Bitcoin's at 20,000, and I'm certainly not saying we're going to get down to 30,000 or even 20,000, I really am quite agnostic what's going to happen there. But if it were to go to 20,000, I would literally be jumping around the room, because it would enable me to buy twice as much Bitcoin with the same fixed US dollar amount as I could buy when Bitcoin's at $40,000. So it's very important when markets are like this, turn off your monitor, go out in nature, stay strong, make sure you know what you own. If you own Ethereum or XRP or Cardano or Solana or one of these coins, know why you own it. Also, don't use leverage, as we demonstrated with this chart. Leverage is going to get you blown up, and you're not going to end up at the end of the decade still holding your Bitcoin. Hodling is very hard. It's not an easy path. And what's even more difficult, though, is trying to trade alts in order to end up with more Bitcoin. And I can't tell you how many emails and comments I got when Ethereum was right at its peak. All these people who are saying they're going to buy Ethereum or Solana and they're going to use it to trade back into Bitcoin. If you're one of those people who did that, let me know how it went. And I don't mean that in a sarcastic way. I think this is something that's very difficult to do. And if you tried to do it and failed, maybe don't do it again. I think it's important during periods like this, again, turn off the screen, spend time with your loved ones, keep stacking sats if you still believe in Bitcoin and if you've done your research. And I think a better use of time during these volatile periods is to really spend the time on your Bitcoin education, trying to understand it better. If you own another coin, you should try to understand why you own that, and ask yourself, maybe when you buy something, you write down a little note in a notebook, I'm buying this to hold for this time period and for these reasons. You all know the reasons that I'm buying Bitcoin. I'm buying it to hold it forever, to pass on to my grandkids and great-grandkids and great-great-grandkids. I'm buying it as the life raft in this fourth turning at the end of the long-term debt cycle. So I'd encourage you to use the next few days. If you have the time, I have hundreds, literally hundreds of videos about Bitcoin on my YouTube channel. Dig into some of them and see how my thinking has evolved. And I try to answer a lot of very common questions and points of FUD surrounding Bitcoin. So I'd encourage you to go back, look into the archives, maybe watch a couple of these, and use this as a way of making yourself a stronger hodler. In the meantime, I'm actually going to be traveling for a couple days. It seems like whenever I travel, Bitcoin gets extra volatile. I'm sure it's there's a correlation, but no causation there. But I will not be releasing a video on Saturday or Sunday. I look forward to seeing you all on Monday and seeing where this market takes us then. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Stay strong, hodl on, and I'll see you on Monday.